So the fallout is starting. Now, sure, Trump has delayed his tariffs for 90 days, but this partial rollback means nothing. Now, when the markets opened yesterday, the big spike quickly sold off. Investors simply didn't buy what Trump was selling. The US economy was in trouble before, but Obliteration Day simply confirmed the hegemon is getting really desperate. And let's not forget that Trump was bragging about countries bowing down to him to get a deal. Imagine that, right? I mean, does that really make America look like a good trading partner, or will it just isolate the US economy? But it gets crazier. Do you know why Trump backed down yesterday? It was because that was his strategy to contain China all along. And here's Besson trying to gaslight everyone.
This was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. And that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors, and we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate, things will turn out well.
Look, Besson deserves an Academy Award. He's a better actor than half of Hollywood. No, Mr. Secretary, that wasn't your master plan. The real reason for the backpedaling was because the bond market collapsed and yields went to the moon. But around the world, countries have decided we need to pivot away from the US. Trump is just too mercurial, and whatever deals we seal today can be abolished in a heartbeat tomorrow. And that's why Spain is pushing Europe to pivot towards China to counter Trump's tariff war. As the Prime Minister said, every country loses in a trade war, especially workers and the middle class. This goes against Besson's plan to contain China's economy. He wants to gather US allies like Lord of the Rings and collectively raise trade barriers to block out Chinese exports. This is the problem with the US trying to speed run their reshoring. China will eventually rebalance their economy by consuming more, but trying to coerce them with a 100% tariff is only going to backfire. Not only will Beijing counter tariff you back, other countries will see the truth. If it's China today, it will be us tomorrow. Now, of course, Besson isn't happy about Spain joining up with China. It throws a wrench into the US agenda.
I'm not sure whether it was the prime minister or the economic minister in Spain made some comments this morning. Oh, well, maybe we should align ourselves more with China. That would be cutting your own throat, because I can tell you that these Chinese exports that the U.S. tariff wall is going to keep out, that China, for all of you who can remember that Disney movie of the brooms carrying the buckets of water, that is a Chinese business model. It never stops. They just keep producing and producing and dumping, and it's going somewhere. And I think, Rob, at the end of the day, that we can probably reach a deal with our allies, with the other countries, and then we can approach China as a group.
There are two key assumptions that Besson just got wrong. The first is to assume China won't raise their consumption. As it stands, China has to move towards a stronger domestic consumer. Yes, the current model of massive production only can't last forward. That model won't work anymore. But don't get it twisted. Trump just wants China to reduce production so that the US can fill in the gap. And once again, we must remind the world here, they do not care about friendshoring. They want to reshore industries. And that's why there's a global tariff imposed. If we look at Spain's balance of trade, it looks like China is winning. The Spanish are running a trade deficit of almost $31 billion, so they are buying more from Beijing than what they sell. But this is free trade. There's a reason why the deficit is so high. It's because Chinese goods are more desired. China is exporting deflation to Spain. A big portion of these imports, almost 25%, are intermediate goods, and this includes electronics, machinery, plastics, and chemicals. Inputs that Spain needs for their own manufacturing. But here's the irony. By punishing the world with reciprocal tariffs, Trump is actually helping China's export market. The original plan is to get countries to build factories in the US, to compromise their own industrial base, to build up American manufacturing. But it's not that simple. Think of the cost of labor, the regulations, and the ecosystem. US supply chains are even more compromised now thanks to Trump's 100% tariff war on Beijing. Trump's reciprocal tariffs are going to backfire. He slapped the EU with a 20% punishment. This is a problem when the American consumer is weak and EU products to the US are mostly discretionary, which means Spanish exporters might have to eat some of the tariffs to remain affordable to US consumers. Now, how do you do that? Well, you have to lower the cost of your other inputs, your raw materials. And where can you get the lowest price goods like semiconductors? You get them from China. And if we look at Spain's imports of Chinese goods, all categories are growing, especially machinery and vehicles. If Spain joins the US to set up import blockades, they will just hurt their own industries. Should their cost of production rise thanks to shutting out Chinese inputs, who does it benefit? Spain will lose, China will lose, and the US will ultimately win. A global tariff is a tactic to skew the playing field for US manufacturers at the expense of everyone else. Most countries can see through these rules. The tariff war isn't a blanket win for the United States, however. There are many blowback effects, some of which we won't even know until months later. In addition to that, China is the biggest economic power that supports globalization. While the US is turning inwards, China wants to expand their production globally. And Spain, they want a new shiny cherry and BYD factory. Chinese companies are thinking of piling in another $3 billion of investments into Spain, and this will bring the total amount to 10 billion euros. Spain has the most productive car industry in the EU. They can churn out over 13 cars per manufacturing employee, while the EU average is only 5. And if you combine that with Chinese EV technology, Spain will be able to leapfrog the competition in Europe. Plus, this will create a ton of jobs for the Spanish economy. By closing up the US economy and not investing in other countries, Trump could lose the long-term game. Deciding to go protectionist will backfire if the rest of the world decides to continue free trade with each other. Spain won't sacrifice themselves for the US, it's very unlikely. But let's talk about the China-US economic war. While the talk is centered around trade tariffs, there are other arenas of competition, and a really big one centers around financial systems. We seem to have forgotten the US still has many other types of sanctions available. The majority of this revolves around the dollar and financial markets.
How far are you willing to take this in terms of this soft war with China? We've got Chinese stocks trading on U.S. exchanges. U.S. investors are buying those stocks, and that's helping China fund its military. Let's face it. Are you willing to go that far to remove Chinese stocks from U.S. exchanges?
Maria, I think everything's on the table. We are putting in process export controls for high-value security-related goods. We are talking about the export capital controls in terms of, as you said, a blacklist of things that U.S. Whether pension funds, endowments, investors should not be investing in to fund the Chinese military machine.
So Chinese stocks listed on US exchanges might be next. In addition to this, Besson also admitted that capital controls might be coming. China will be blacklisted so that pension funds, endowments, and investors can't easily invest in their companies. Besson wants to starve China away from capital flows. This isn't a good idea because China won't take this lying down. While the US has the reserve currency, they simply can't print or borrow more money, especially at this point in time. The bond market is already starting to blow up. China is asking their big banks to reduce their dollar purchases to stop buying US dollars in their operations. China wants to put more pressure on the US economy by seeing how far the dollar can fall during this trade war. Additionally, they are also weakening their own currency to counter the tariffs. Beijing wants to engineer a slow devaluation to boost their exports, so buying dollars now is out of the question. It will only help Trump's economy and destabilize the yuan. China walking away from dollars is to be expected. When you raise the tariff level to over 140%, there's zero need to sell stuff to the US anymore. And with China's own counter tariff, there's also zero need to buy American goods as well. So what's the point of hanging on to your dollar reserves? This applies to the whole world. Trump's tariffs raised the effective rate to 22.5% in April. That's the highest since 1907, beats even a Smoot-Hawley Tariff Act. You hit back all the way to the 1800s to find a higher tax rate. So if the flow of trade to and from the US drops by say 20%, that's 20% fewer dollars needed in global transactions. This is horrible when your budget deficit still isn't fixed yet. This is the problem with waging a trade war when budget reforms aren't even finished. He is doing too many things all at once. By 2029, the IMF forecasts a debt explosion in the US. Trump is going to move ahead with his tax cuts that will cost the economy trillions to plug the hole. And the more you spend, the more destabilizing it is for the bond market. You have to issue a lot of bonds so the supply goes up. But thanks to the tariff war, demand for dollars is going down. By extension, buying Treasury bonds is going to slow down as well. And which country will want to fund the US that's punishing them? What we have now is a dangerous treasury squeeze, and China will only make the situation worse. Investors have no idea where to put their money anymore. It used to be US bonds, but the entire yield curve looks very unattractive. The market expects the Federal Reserve to cut rates by 4 times by 2026, so we are headed down to 3%. As an investor, why would you buy short term bonds when you have to roll them over at the lower interest rates 12 months later? Furthermore, we could be entering a period of stagflation in the US. This is where economic growth grinds to a halt while structural inflation stays high. In other words, the worst of both worlds. JP Morgan is warning that Trump's economy will enter a recession in 2025. Unemployment will rise to 5.3% and underlying inflation could climb to 4.4%. This is terrible for bondholders, especially for people looking to buy 10 to 30-year treasuries. Now, sure, you can lock in a 4.3% yield for a decade, but if inflation rages on at 4.4%, your returns are effectively zero. And if yields continue to rise thanks to Trump's trade war, it would mean bond prices collapsing. So now you're stuck with a hot potato. This is the problem with the US economy. Everything is so heavily financialized. You tinker trade, the bond market starts to collapse. You tinker with the bond market, maybe trade starts to collapse. And that's why we have that 90-day reprieve. The geniuses in the White House, they finally saw the truth. Now, China still has over $750 billion in US debt that is ready to be dumped. And at this point, I don't think Beijing cares if they book a loss or gain by selling. They just want to burn down the house while getting out. The Achilles heel of the US economy is the bond market. Just a week ago, we were well below 3.9% on the 10-year yield. But look at how fast and furious things went when Trump started the unthinkable. In less than 48 hours, the 10-year yield climbed by over 60 basis points. That is unprecedented. It was trading worse than an emerging market bond. This gives the market the yips just to hold US paper. And if this bond repudiation continues, we could see the world gradually offload even more holdings, and this in turn makes the debt crisis even worse. Even Trump realizes the importance of the bond market, because if everything blows up, that's it for the entire economy. It will be game over.
Markets that persuaded you to reverse course?
I was watching the bond market. The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
So the US isn't playing with a really strong hand here. Trump is probably bluffing his way through, and the debt markets just called his bluff. But if he tries to escalate things with the world, don't be surprised if China triggers yet another bond shock, or maybe global investors themselves will have had enough. Hopefully the White House realizes this and backtracks. But let me know what you think. Will the EU actually drift closer to China? And what made the bond markets collapse? Was it Beijing really dumping bonds? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.